Hey everyone, this is C Crypto Daily Buzz. Today is March 28, 2026, and we're looking at how massive Bitcoin options expiry, a huge SEC ETF decision day, and new 24/7 tokenized ETFs could impact traders in Southeast Asia. This channel summarizes the most important crypto news for investors in Southeast Asia, including the Philippines, Vietnam, Indonesia, and OFW communities watching remittance flows. Bitcoin just went through its largest options expiry of 2026, with around $14 billion in BTC options and roughly $17 billion in total crypto options expiring on Deribit this Friday. This expiry wiped out close to 40% of open positions, while the Iran-US conflict and failed peace talks kept geopolitical risk very high, pushing Bitcoin down from around the 70K zone toward the high 60Ks and even testing lower support levels. For Southeast Asia traders, including those in the Philippines and Indonesia, this overlap between macro war headlines and a quarterly options wall means intraday moves can be sharper than usual, especially around key strikes. My view is that this kind of event does not change the long-term Bitcoin story by itself, but it can shake out over-leveraged positions, trigger forced liquidations, and give more patient spot buyers another chance to accumulate if they fully understand the risks. The US SEC is facing a major deadline to rule on 91 crypto ETF applications covering 24 different tokens, including XRP, Solana, Litecoin, and Dogecoin, after its recent move with the CFTC to better define digital asset commodities. Analysts had already pushed approval odds above 90% for several of these spot products, and derivatives expiries around the same date add another layer of volatility as traders position for either approval, rejection, or delay. For Southeast Asia investors, more spot ETFs in the US would mean additional regulated access points and legitimacy for these coins. But it does not automatically guarantee big price moves, especially if a lot of flows and expectations are already priced in. My take is that traders in the Philippines, Vietnam, and other sea markets should treat any outcome as a liquidity event. Approvals can create short-term excitement, while delays or denials can trigger sharp pullbacks. So risk management and position sizing matter more than trying to guess a single binary result. Franklin Templeton, a 79-year-old global asset manager, has partnered with Ondo Finance to tokenize 5 of its ETFs, covering areas like high-yield corporate bonds, equities, and responsibly sourced gold. These tokenized ETFs will be tradable 24/7 through Ondo Global Markets using crypto wallets, allowing investors without traditional brokerage accounts to access them. But the platform is not currently available to US users and is expected to launch first across Europe, Asia, the Middle East, and Latin America. For Southeast Asia, this is an important signal that tokenized real-world assets are moving into the mainstream, potentially letting traders in places like the Philippines and Indonesia hold on-chain exposure to stocks, bonds, and gold alongside Bitcoin and stablecoins. In my opinion, this 24/7 ETF model could blur the line between crypto trading and traditional investing, but it also introduces new layers of smart contract, platform, and regulatory risk that C investors and OFWs using remittance-linked wallets should understand before allocating serious capital. To summarize, first, Bitcoin's 14B options expiry collides with Iran war-driven volatility. Second, SEC's 91 filing crypto ETF deadline could shape XRP, SOL, LTC, and Doge sentiment. And third, Franklin Templeton Ondo tokenized ETFs bring 24/7 on-chain access to stocks, bonds, and gold. This video is for information and education only and is not financial advice. All investment decisions and risks are your own responsibility. If this video was helpful, please subscribe, hit the like button, and turn on the notification bell. For real-time alerts and trading signals, join our Telegram channel, link in the description. See you in the next one.